I counted a total of 10 questions about regulation and government. That seems to be the most frequently asked question, mainly about the China ban, the reason and the effect that this will have on the crypto market. There were also questions about whether you think other governments will follow China and how you generally see the game between regulators and crypto players on the other hand. And finally, also in this context, how do you see the planned CBDCs or central bank digital currencies coming into play? So maybe you can take this as the next block.
And if there's any questions, then just post it into the chat that tag along there. I think the first thing is to get rid of that fairy tale that Bitcoin could be banned. It's impossible to ban Bitcoin itself, because that just means you're banning math, you're banning numbers, you're banning cryptography. That's just not going to happen. And most countries actually understand that, and most countries know that. Also, China hasn't banned Bitcoin. What all these countries actually are doing, they are regulating and heavily regulating platforms that are centralized, like exchanges, and they are regulating those. And that's obviously very efficient. That works really well. And at the end, you're kind of not really banning Bitcoin, but you're limiting access to that ecosystem. And I think that's really, really important to understand. So you don't really have to ban Bitcoin, because it's very difficult actually to do. You can either ban or block or set extra hurdles for these exchanges. And it's not only China who's doing this. The US is doing this, Germany is doing this, Singapore is doing this. For example, in the past, only exchanges, so platforms that facilitated the exchange of one asset to another, was regulated. Now they're looking into simply regulating if you're offering a service to host wallets. So simply that service could get regulated. Now that would mean that everyone has to have their own wallets, everyone has to have their own services, which obviously is doable, but it just makes it even harder for people to get access to that ecosystem. So these things are the things you can regulate. We can increase taxes. We can tax these things separately. And at the same time, right, it would actually work with being aligned with a central government-backed digital currency, a CBDC, because you're not really kind of blocking any of those. You're just saying, look, this is the regulation that you need. And pretty much all the banks that hold euros, that hold dollars, that hold Swiss francs, they have those steps already that you would need for Bitcoin. So for them, falling under this regulation would be absolutely no issue. I think we have to expect all these stricter rules. I think they are all, like, it's gonna get stricter and stricter and stricter. We have to expect taxes, special taxations. We're gonna have to expect unrealized gains taxes on Bitcoin. I think that's gonna be the track record. Now, there's a flip side to this, and I wanna point this out. The flip side is, and we saw this in 2017, when China really kind of shut down any platform in China that offered cryptocurrency services. What basically happened was the following. All the talent, all the good money, all the legal use cases got driven out of the country. And actually, Singapore felt a lot of that. In 2017, we had so much inflow of Chinese money, Chinese users, Chinese engineers, Chinese business owners. But who stayed? Who stayed were those with the illegal use cases. And by law, by definition, they don't care about the law, so they're going to bypass that. And so that is always the difficult part if you have these open source technologies, if it's pure tech. If you're too strict on the regulation, you're driving out the good and you're just keeping the bad, and that's just going to make you lose. So I think regulation is not just a one-way street. Governments have to be super careful in not overdoing it. But I would be surprised if we don't see stricter and stricter and stricter regulation over the next 10 years.
Mm-hmm. Yeah, sure. Maybe also a question of self-interest of the CBDC governments. And yeah, sure. But what do you say about, is that going to harm the current China movements? I mean, it seems to harm the Bitcoin price in the short term. What about the long term?
Yeah, I mean, short-term prices on Bitcoin, just like on anything, are very emotional. So as soon as China goes out and says we're gonna restrict Bitcoin trading, or we restrict Bitcoin mining, which again is also quite questionable how you actually restrict mining, because all it is you're restricting calculating useless formulas, which doesn't make much sense to restrict that. But obviously very emotional short term. In the long term, it's been shown over and over again that it's completely irrelevant. Maybe a word on CBDCs. CBDCs are not going to bring much of an innovation to the financial system. So if the European Union or the US or China with their yuan come out and say, we're going to make the CBDC, it's no innovation to the financial system. What there is an innovation to is the tech applications, because suddenly you can run the entire system on new financial rails, meaning you have completely new access points that in the past you didn't have. So if you wanted to integrate with Visa or MasterCard or with the banking system, you need to really use super low level programming languages and super low level adapters to kind of connect into those systems. Very difficult, very inefficient, very slow. Blockchain, despite being relatively slow, can open this up extremely and allow for fintechs and blockchain companies to have completely new access points. So that is where the innovation really comes from CBDCs. CBDCs doesn't do anything to the actual financial system.